Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today I have with me Emilio Figueroa. For once, I do know how to pronounce the last name, so I didn't have to ask him how to pronounce it since we're both Latinos. For the benefit of the audience, we'll do this in English for the most part. But Emilio, thank you for joining me today. How's it going?
Hi, Tony. Great to meet you. Thank you for having me. Much appreciated.
Awesome. So Emilio is the Chief Insurance Officer at Foresight, which is in the work comp side. So Emilio, we always give the chance at the beginning to kind of give the elevator pitch. So what is Foresight?
Okay, so Foresight is a true insurtech. We are focused on the middle market commercial insurance space. So not only comp, but everything else that goes with the commercial insurance space. We do have comp as our primary line, and we'll tack on additional lines to that primary line. Foresight is the foundation for Foresight was a risk management platform from our sister company, SafeSight. And we grabbed that technology, created an insurance program around the technology. And then for us, growing that distribution on a national basis, or pushing distribution on a national basis. Right now we're in 8 states, growing that, but true middle market. And middle market being, different
every carrier defines it differently. Yeah.
Absolutely. So for us, we're looking at 175 to 350,000 in premium is middle market for us. We'll write accounts in that. That's our sweet spot. But we can write, we've written $2.6 million accounts, 2.8. So we'll write bigger stuff too.
Okay. So since it came from SafeSight, tell me a little bit about SafeSight.
Okay, so SafeSight is a risk management platform. The traditional risk management platforms are very legacy-based, paper-driven, paper tablet with a pen type of mark off your checkbox. The owners digitized this after one of their friends had a workplace accident. He got electrocuted, fatality from that. They thought that this was too antiquated. They wanted to change the dynamic and the way risk management is looked at and used throughout every industry, specifically the blue collar industries that are more hazardous. So they created the technology, started growing their tech stack, ended up having a ton of clients in the US. So they decided to move to the US, grew that aggressively. They have, I think, 6 or 7 of the top 10 builders in the US, your Macmillans, your giant companies, your national general contractors. And then from that, moved on to different industry verticals, to light industrial, to agriculture, transportation, manufacturing, you name it, we do it.
So you mentioned the original company, the sister company, didn't start in the States. I know you yourself are originally from Mexico, and you spent some time in the Caribbean. Where was the company at first founded? So
the owners are Australian. So it was founded in Australia. They moved here, I believe, 6-7 years ago.
Okay. And you started with them at SafeSight, and then opened Foresight. Okay, so Foresight. So basically, you guys at SafeSight realized that it made sense to open your own program and get reinsurance backing, and basically operate it as a full MGU.
Correct. So I came on board to advise them on captives and captive strategies. I've been doing captives for 15, 16 years now. So they wanted to do a captive or look into it. Looked at the technology. I thought it was amazing. Could grab the technology, integrate it within a workers' comp program as a foundational part of the workers' comp program, and then bring that to market. Obviously, in order to do a captive, you have to have financial wherewithal to be able to take risk and have that quota share. They couldn't do it at the time, so we decided to go to the program business route. But before we could push it on the program business side, we needed to quantify it for insurance companies. So for us, we got an actuarial study done by PIR. It shows that through the engagement and the usage of the technology, you can minimize the frequency of claims by up to 57%. So insurance companies were blown away by that. They're interested in talk about engagement, talk about behavioral science. How can this be done? And it's just true behavior change. If you look at and the easiest way so that people can understand that is if they look at what happened with the pandemic. You had to wear a mask. People hated wearing the mask in the beginning. After 45, 60 days, which is when you create a behavioral change, you turn something into a habit. then you're accustomed to doing that. Same thing with risk management. That's how we're looking at. We're pushing engagement as much as possible from the bottom up. So from the frontline worker all the way up to the C-level. Traditional risk management is from the top down. We're working and changing that company culture, from the frontline worker, from the employee. Change the behavior, make sure that they're engaged. Once we see the engagement, after 2-3 months, you see the dramatic change in risk culture change within the organization.
Okay, so who is who's the client for Foresight? Do you go through other brokers? Like, do you act as a wholesaler for other brokers, or are you selling this technology to carriers, all of the above, or kind of what are the different ways to access the
Sure.
Foresight technology?
So Foresight has an exclusive on the SafeSite risk management technology. And so we built the insurance program around that. In my eyes, in Insurtech, the way we see Insurtech right now, it's just vendors providing technology or services to the industry. Well, that's not Insurtech in my eyes. Insurtech is having a foundational technology, whatever it is, wrapping and creating an insurance program around it and using that as your pitch. Now, our distribution is solely through the broker model, wholly. We don't go direct to consumer. We don't go through insurance companies. It's just direct to consumer, and we're a true MGU model. So we do the underwriting, we do claims, reinsurance relationships, we do all that.
Okay, perfect. So if I'm a listener or a viewer on YouTube, I'm likely a broker or a carrier side person. So for the brokers, what does it make sense to give you a call if I have a single risk that might be a good fit, or do you need a certain a certain flow of policies for it to make sense to work with you, or how does that work?
So for us, we are a true open market MGU. We'll take any individual risk from a broker, not a problem. We don't care how much volume you give us, as long as you're giving us those accounts. We don't want, our minimum file premiums are 25,000. Our sweet spot's 175 to 350, and we like anything above 150, let's say. And if you're going to sending us submissions that are $30,000, $50,000, there's better carriers for that. We don't want that business because we don't see engagement within that business.
So 150 premium, is that the work comp premium or the total package premium for it to make sense for you guys?
So it's pure work comp premium.
Okay,
so 150,000.
Okay, so if, for brokers that have at least a single risk, that at least 150,000 in work comp premium, and it's the injury heavy type of, the like blue collar type of work that would benefit from helping reduce those losses.
Yeah, well, we don't want injury heavy clients.
Yeah, I
don't want those at all.
The type of business, the construction, those types of businesses that can really benefit from reducing the injury frequency.
Absolutely, and from clients that are going to engage with the technology, that have a proactive mindset and a reactive mindset. Not only do you want to have them be proactive by using the technology, but when there is a claim, we're on top of the claim. We try to talk to our insureds on a weekly basis. We try to talk to the injured employee on a weekly basis, see how they're doing, see what we can do to help and ease them back to work faster. For us, it's minimizing what we do and what we can do, just to humanize that claims experience as well.
I love that side of it. In a lot of insurance nerds, it has been around the idea of humanizing the employee side of insurance, and we love helping carriers do that. Doing that on the claim side, especially in work comp. Work comp is such a it's such a personal thing, right? If I get injured while driving, that's one thing, but an injury that keeps me from working, right? An injury related to work affects my entire identity, basically. It's hard.
Well, absolutely, and especially if someone's injured and they're home, and you don't want to getting accustomed to staying at home because they're going to be lethargic. They're not going to want to come back to work. They might have mental health issues. You want to minimize that. When that happens, if you don't minimize it, then that turns into it goes from the medical and it goes to the indemnity part of the claim. And that's where the industry is failing dramatically. If you look at your average workers' comp claim in California for 2020, 54% of overall claim expenditures were for medical, 46% were for indemnity. That's ridiculous. We should be paying as much as we can on the medical side so we can get them back to work sooner, make sure we have a healthy workforce, make sure that they're engaged and they feel like we care about them. And that's where our humanization of the work of workers' comp comes in, or the claim side. Our current ratios for us, we pay, our indemnity payments are about 21%, 22%. So it's dramatically lower. We try to minimize the indemnity as much as possible and get the employees back to work, which is what matters. I mean, humanize it, talk to them, see what they need. They can't go back to work because they don't have childcare. Fine, we'll send you a babysitter.
That's fantastic. You mentioned that in California, the measure of the percentage, and I didn't write it down, the percentage that's going for indemnity versus the actual medical bill, or rather indemnity versus like non-medical expenses. Do you have that measure for your own claims? And how
we do?
How much better is it? Are you guys than the average workers' comp in California in that measure?
So the metric for the WCRB 2020 medical is 54%, indemnity 46%. For us, our indemnity is 21%. I think it's like 21.7.
Oh wow, so less than half.
Less than half.
Okay, are you guys active in all 50 states, or is it just California, or just the West Coast?
So right now we're in the Southwest. So we're in California, Nevada, Arizona, New Mexico, Texas, Louisiana, Arkansas, and Oklahoma. The goal is to expand nationally. Looking at different ways of doing that right now. Our current carrier partners very friendly in helping us get there. So looking at expanding the Southeast, towards the end of this year, and then going to the Northeast by the end of the year, and then the rest of the nation by, I would say, February, March of next year.
Okay, and you only launched Foresight March of 2020, so it just a little bit over a year, and you're already in a whole bunch of states. So that's a really fast rollout. That's fantastic.
So we started writing business October of last year. In the current 8 states. So the goal is to be national no later than March of next year.
Okay, yeah, that's a very, very, very fast growth. How many employees at Foresight?
So at Foresight, I think we have about 26, 27 employees, and we hire 2-3 new people every week. So it's tough to figure out, the actual number. SafeSite has probably 30 employees as well. I think we're about 65 total under Foresight Group, which is the parent company.
Mm-hmm. Okay, and you're in San Diego yourself, but I see on LinkedIn that you have listed Foresight in San Francisco. Is there a San Francisco office, or is everybody remote? How is that working?
So when Foresight was founded, it was in San Francisco. Now everyone's remote. We did have, like everyone else, we did have a home office, but now we don't have a home office. Everyone prefers to work remote, and we see that everyone's working harder when they're at home, and they're happier. So if we get more production, let's get more production, and everyone's going to be happier anyways.
Okay, so really embracing the remote going forward.
Absolutely, and we would like to get together. Right now, we're getting together, I believe, next month or in October. As a unit, which will be great to see everyone, and we try to see each other as much as possible. When we're meeting clients, and we invite underwriting to come out, we invite claims to come out. Business developments out there. But trying to get everyone together, and even on the risk management side, bringing everyone together is very important to maintain that company culture and that excitement within the organization.
And I like that you guys started with California, because California is a really tough workers' comp market. I can't wait for you to get to New York. Just the other really, really tough workers' comp market. But California is like a nationally known really tough workers' comp market because it's such an employee-friendly state. So
Absolutely.
workers' comp wise, if you can make it work in California, uh,
You may
probably
not
can
be able
make
to make it work in New York, though.
in the
New
great
York is
majority of
tougher.
states, you'll probably be able to make it work.
Oh, absolutely. And for us, I mean, if you look at, the key workers' comp honeypot states, you have California, New York, Illinois, Texas, Florida, Georgia, Pennsylvania, New Jersey. Pretty much those are the core states for workers' comp in the nation.
Okay. Very cool. Other than the states expansion, which is coming very, very soon, what can you share about the future of Foresight? Are other products or anything else that you can preview?
So our other product lines, we currently are working with Great American on property in our current state base, and then we'll expand that nationally. Looking at growing general liability and excess this year in the current states, and as we expand, we'll bring those offerings to those states as well. We'll be doing professional liability, we'll be doing cyber. I can create an alien policy with Lloyd's of London, UFO policy.
Okay, so you are looking at creating a full-scale commercial lines carrier basically over time.
The whole point, yeah, the goal will be, and it doesn't have to be full stack, but just having national exposure, having that national footprint with all the commercial lines products is key.
Okay, gotcha. So
commercial auto, forgot to say commercial auto.
That's a tough line. That is a tough line. So probably light commercial auto, or are you willing to tackle trucking?
Well, for us, we will take a quota share in specific lines. Like in our comp program, we take a quota share on. Property, we don't take a quota share on. General liability, we will take a quota share on. Excess, maybe. Commercial auto, definitely not. We just want to partner with a carrier that sees the benefit of having that underlying data and the underlying proactivity within our clients that are more risk focused or risk adverse focused, making sure that they see the benefit behind that and looking to partner with those top of the line carriers that are more interested in that.
Okay. So you've had a very, very interesting career. So I'd love to so it looks for on LinkedIn, it looks like you really came into insurance from the premium audits. They're not premium finance, not premium audit, from the premium finance side, and then you ended up in Bermuda and then Grand Cayman. So how tell me about your insurance career. How did you end up where you are now?
Well, first I started working when I graduated high school in the insurance industry. I worked for a small mom and pop firm up in Newport Beach, California. So from there, became partner in the firm, grew that, came down to San Diego, went to film school in San Diego. It's a different story. I wanted to be a filmmaker, with an English lit and French lit minor, backgrounds. Came back into the industry, decided that the entertainment industry wasn't for me. Great times, but it's not. You can't deal with that as you get older, and the longevity factor doesn't work. So decided to open up my own commercial brokerage. Did that, created my own MGU, did a premium finance company out of Utah, had a risk retention group out of Colorado, then had a 831B. I've had an association, captive, group captive, standalone captive, been domiciled in 4 different states. And then from there, opened up reinsurance in Bermuda. For me, if you look at the insurance chain has 5 links. So you have the distribution side, you have the MGU, MGA, wholesaler side, premium financing, carrier side, or captive, which is kind of the same thing, and then the reinsurance side. And just to maximize that acquisition cost for the client, you want to maximize your dollar, your income. And the best way to maximize your income stream is just to get each one of those chains to maximize that dollar. Instead of making 10% on the dollar, you're making 65, 70% on the dollar.
Hey, yeah. So you've done quite a few different things, I always love chatting with Insurtechs that that fit what I like to call the Abel Travis rule, where it's not just tech people and it's not just a tech toy looking for an insurance problem to solve, but rather actual insurance people that get insurance. So it's great to see that Foresight is definitely right up in that list, and actually insurance people.
Oh, absolutely. So in Foresight, I mean, if you look at our underwriting team, we just hired someone else today. We have over 100 and I think 120, 130 years experience, just from the 6-7 people that we have within the organization. On the underwriting side, if you look at distribution, we have over 150 years in distribution. So everyone that's in the Foresight side comes from the insurance or has insurance background. For me, I've been in the industry 32 years. I love the industry. I'm an self-proclaimed insurance nerd. I like to read Best Magazine for fun. My addition. So, anyone that reads Best Review for fun has either a mental issue or is an insurance nerd at heart. Which I probably have both.
Fantastic, Emilio. It's been a pleasure. It's a lot of fun to dig into what you guys are doing. Look forward to see what you do in the future, and as you grow into all 50 states. Thank you for agreeing to come on the podcast. Definitely a lot of fun, and I'd look forward to have you back in a year or two as because I'm like, it's blown away by how quickly you guys have built this into a whole bunch of states already. I guess that having the right safe side being a little bit more tenured was easier than Insurtech's created from the ground up.
Absolutely, but for us, we have to give all our team, kudos on that, because everyone worked really hard. We have people with tons of experience in the industry. When you bring a team like what we have together, and carriers see what you're building, and they see the technology that's been seasoned, but they look at the insurance team, and they, everyone from claims to underwriting to distribution to the C-level. We're all very, very tenured, and we know what we're doing. We know the jargon, we know how the industry works, and they believe in us. And thank you for having me. It's a pleasure. It's an honor to have you to be part of the nerd team.
Awesome. Well, very happy to have you. Have a great one.
Pura vida.
Pura vida.